Welcome to the fascinating world of value, where gold and cryptocurrencies share a common thread. Gold has always been coveted for its scarcity and desirability, making it a timeless asset. But did you know that cryptocurrencies, especially Bitcoin, operate on a similar principle? Just like gold, the allure of Bitcoin lies in its limited quantity. There's a cap on the number of Bitcoins that can ever exist, a mere 21 million. Sure, you can mine more, but as time passes, the process becomes increasingly challenging and expensive. It's a race against time and resources. Now, let's dive into the heart of cryptocurrencies. Bitcoin, the gold standard in the crypto world, stands out for its desirability. It allows seamless transactions without the need for intermediaries like banks or PayPal. The beauty lies in its widespread acceptance, with countless people eager to embrace it. But the crypto landscape is diverse, akin to precious metals. Take Litecoin, for instance, less popular for transactions, but it has its unique charm. The quantity of cryptocurrencies is limited by design, each with its own cap on mining. It's a controlled scarcity, creating value through rarity. So, how does the crypto magic happen? Transactions are secured and new coins are created through a process called mining. Individuals invest processing power and electricity to solve complex math problems and, in return, receive coins as rewards. However, much like gold mining, the difficulty increases over time. In the dynamic world of value, cryptocurrencies follow the footsteps of gold: limited, desirable, and valuable. Bitcoin takes the lead as the gold standard, while others play catch-up. Stay tuned for more crypto insights, where scarcity meets desire and the race for value continues. Until next time, keep exploring the exciting landscapes of finance and technology.